Hello, thanks for joining. My name is Jamal Khan. I'm a senior tax partner at Churchill Tax Advisors. Today, I'm doing this webinar based on the recent news about the demise of the hybrid LLP tax schemes. I have been receiving a number of calls over the last couple of days. So I thought I'd do a quick webinar just so that I can update the hundreds and maybe thousands of landlords who have been a victim of these tax schemes, and just to give you an overview of how the legislation works, what you need to do, and what the next step should be, and what HMRC's view is. So let me just share my screen. Right. Okay, here we go. So yeah, the webinar is called Rise and Fall of Hybrid LLPs. This is a little bit about us in terms of what we do. We're specialists in tax planning. We're chartered tax advisors, chartered accountants, chartered certified accountants. So we're quite well known, and we've been in around for quite a few years. Hybrid LLP tax scheme. Who are the promoters of this? So this is actually, this webinar is a continuation of my webinar from last week, which was about bad tax schemes. That was also about a property group that has been promoting really dodgy tax schemes. Please do make sure you watch my webinar, Bad Tax Schemes. So who's promoting this? These schemes are being promoted heavily by a couple of property groups that have come into the play in the last 8 years or so. There were previously tax property groups. They used to advise landlords on what to do on landlord strategies and finances and property training, and they suddenly found an opportunity, and then they started telling people how to save tax. So that doesn't sound right, does it? You go to a property professional to tell you how to save tax, and there's two of them, and they've got thousands and thousands of members who are ignoring tax advisors, qualified tax specialists, and going to property people to tell them how to save tax. Well, this was going to happen. But I've been saying this for 8 years. People who know me for the last 12, 10, 15 years, I've been saying this since 2014. And this is going to fail. Don't do it. Stay away from it. You need to go to a tax specialist. Don't ask a property developer or a property investor on how to save tax. Anyway, so these are being promoted heavily by property groups. And the way they gain credibility is then they attach themselves to a firm of barristers or or solicitors. And then they tell everybody, look, we've got a barrister sitting here. We've got a solicitor sitting here who's advising you on tax, which also doesn't make sense. But people, the unwary, the innocent landlords, thought, oh, that sounds credible. There's a barrister sitting there, and there's a solicitor sitting there. So we should just take a tax advice from the first property company that's latched on to a barrister. They've got no qualification in tax. They're not regulated by any of the accountancy and tax advisory bodies, for example, the ACCA or the ICAW or the CIOT, which is Chartered Institute of Taxation. There's no qualification, no recognized as tax advisors anywhere. And people who know me and who've talked to me about this, and I've been saying to them, these guys are not tax advisors, stay away from them. Yes, use them for your property development needs and property training courses and how to make money on flips and stuff, or where to get your tenants' contracts from. Yes, go there, but do not take the tax advice from them. Don't ruin your lifetime savings. A lot of people listened to me, some people didn't. Anyway, this is where we are. So how does the hybrid tax, hybrid LLP tax scheme work? What are the mechanics? Uh, so you would have a landlord with multiple properties. You would form an LLP and transfer the properties into the LLP. Then you would add, so you'd have a couple of people from the family, for example, husband, wife, etc., as LLP members. And then you'd form a limited company, which will also become a partner of the LLP, a corporate member. And that is why it's called a hybrid LLP. Okay. If there are no corporate or limited companies as partners, it's a normal LLP or normal partnership. Because you're adding a limited company, it becomes a hybrid LLP. So the next point would be that they would allocate limited amount of profits to the normal human beings members, and majority of the profit goes into the limited company, which is a member of the partner in the LLP. And the limited company, the Section 24 rules do not apply to limited companies, so they would allocate little profits to the human partners, and majority of the profit would be allocated to the limited company, because limited company can get full tax relief on the mortgage interest. How incredible is that, right? And then the other partners pay tax at the basic rate. Amazing. And base cost of the assets. So the internal tax liability, the income tax position is very low. Base cost of the assets is uplifted at the time the LLP is set up. So if they sell the properties after the LLP is set up, there's no capital gains tax to pay. This is amazing. And there's no inheritance tax to pay either, because apparently the structure qualifies for business property relief as a trading business. And this can only be coming from a person who has no idea about tax, absolutely no idea about tax, and there's not up to date with the legislation, what's been happening, what government has been announcing. And I was screaming and shouting. If you go to my webinars in 2018, 2019, 2020, when I had more hair, when I didn't have any gray hair, you would see me screaming and shouting, guys, stay away from this rubbish. This is gonna collapse. But nobody listened. Anyway, many people listen. I must be honest. Many people listened to me. Some people didn't listen. And now those people have, since last week, my phone's been ringing. Jamal, oh no, you told me in 2017, don't do it. I did it, and now I'm stuck. How do I get out? Help me, please. You told me in 2020, 2021, you told me. So there's lots of people calling me now. How do I get out of this? So, what's the legislation on this, on hybrid LLPs? So it's a mixed member partnership legislation in the Income Tax Act 2005. We quoted Section 850C and Section 850D, which details on how excess profits of a corporate member of an LLP are reallocated to an individual or individual members. The rules were changed in 2014. And that was the time when HMRC released press statements that hybrid LLPs are going to be essentially banned, and the profits will be allocated to the individual members, and it's not going to work. And all the people who are specialized in tax, or who have to take tax CPD, tax training, and need to keep themselves up to date with the law and the legislation, kind of got that. We said, okay, fine. Government has made new rules. Because we are required to take training and keep our knowledge up to date, we found out in 2014 that this is not allowed anymore. So you've got better stop. On the other side, where we've got property professionals who don't need to keep themselves up to date with the legislation, the law, they didn't know about this. So they carried on advising people. We found a loophole. And I was screaming and shouting in 2017, 18, 19, 20, 21, 22. The law changed in 2014, guys. You need to stop doing this. Clearly, the people who are advising you don't know that the law changed. Anyway, so people kept on going to these property professionals. So the disposal of income tax, the next piece of legislation is about the income streams through partnership anti-avoidance legislation contained within the Income Tax Act 2017. Okay, which applies to charge the corporate member's income on the transferor of the income stream. So, for example, if there's a limited company and we've allocated, say, £100,000 of profits to the limited company in the partnership, in the LLP, then that £100,000 will be charged onto the real members, the human beings. The next one is Taxation of Chargeable Gains Act 1992, which treats any dealing in chargeable assets by an LLP by the individual members. LLPs are transparent for tax purposes, so members own a fractional share of assets. And this means the base cost of the properties are unchanged following their introduction to the LLP. So this is really ridiculous. That these promoters were saying that once you set up the LLP, the base cost is uplifted. It doesn't. It's an LLP. It's a partnership. It's still ownership is the same. So when they were saying that if you sell these assets after the partnership has been set up or the LLP has been set up, there's no capital gains tax. That's absolute rubbish. This is not new stuff. This is very old legislation. And same goes for inheritance tax. The property rental business is likely to be within the exclusions from BPR, making the holding investments under Inheritance Tax Act 1984, because the use of hybrid model does not change availability of such relief. The fact is that it's a rental business, and I've had numerous discussions. People telling me we've set up a trust and we've set up a property trust and property is owned by a trust and there's a hybrid LLP and it qualifies for reliefs. And I've been saying, no, it doesn't. Stay away from it. Okay, so this is where we are. So if you've been involved in a hybrid LLP tax scheme by one of these property groups, this is what you need to know. HMRC have confirmed that the hybrid LLP tax scheme does not work. Full stop. Okay. You're likely to pay extra tax with interest and penalties, more than what we had to pay a couple of years ago. Users are advised to stop participating in this scheme immediately and seek advice from a qualified tax specialist, ideally a chartered tax advisor regulated by the CIOT, Chartered Institute of Taxation, because they have standards about tax and members are required to keep themselves updated with the legislation. Okay. What happens to the promoters? The promoters, the property groups, are most likely, based on my experience of the similar scheme providers, they will disappear. They'll liquidate their business, and thousands of landlords will be left stranded, who will now need to settle their affairs. HMRC will charge them penalties for not registering. The promoters will be charged penalties for not registering the scheme. They will receive daily penalties of £600 or penalties up to essentially £1 million. So this is what you need to do. If you've been involved, you need to take control of your affairs. By all means, you can contact me. I'm a chartered tax advisor. I'm a fellow chartered certified accountant. I've been doing this for 27 years. I'm like Deloitte, and I'm a well-known specialist. I'm quite well-known. I work with accountants and solicitors from across the country, and I advise different sizes of states and companies on tax planning matters. If you've been using one of these schemes, get in contact with me. We can discuss your position. My telephone number is there. My email is there. And we can discuss your position. We can potentially look at what options you have and how we go forward. How do we settle, or how do we change the structure? What other options you have? And but if you don't, HMRC are likely to start knocking on your door, because normally these providers are contacted and they will be asked, these property group will be asked to give details of every client that used this scheme, and HMRC will be writing to them. So HMRC will be writing to you in due course. So it's better that you be proactive and start moving. So yeah, I'm here to help. And if you have any questions, do get in touch with me. Just stop sharing. And thank you very much. Thank you for your time, and hope to see you soon again. Bye.